live streaming on both YouTube and on X on multiple channels, including Wolf Financial. Thanks everybody for joining. Sean, how you doing this week?
Yeah, doing good. Bit of a strange week, obviously a bit flat. So obviously we'll get into that. Looking forward to next week a lot. So yeah, let's see.
Nice. We got Sean Trades with us as always, and Invest K. K, how you doing?
I'm doing great, Sean. And Nate, what's up with you guys? It was an exciting week, and next is going to be even more exciting with so much stuff coming up.
Yeah, I had a great week, you guys. And this is again for those you don't know out there. The handle's at Trader Nate here out on X, and I have been talking a lot about Marathon Digital, Arista Networks. Last week we covered Arista Networks, and it took off like great Friday. And so yeah, we're really excited to talk about this week's trade ideas. Before we do, quick disclaimer. I remember everyone, this is not financial advice. This is merely entertainment and educational material and meant for that kind of value. Appreciate you subscribing and smashing the like button and tuning in every week. And we will definitely get through our trade ideas because we enjoy doing it. Just three friends here again, though, not financial advisors and not financial advice. Okay, with that aside, let's get some charts rolling. What do you guys think?
Let's do this.
Let's do it. All right, so we got a nice week ahead, like as you mentioned. Interesting week last week, some good moves up and down. I mentioned Arista Networks, that was huge, but on Friday, it was like, moving, and then Friday absolutely took off. But what about you guys? What were you looking at?
Go for it, Sean.
Yeah, no, I was looking at Tesla most of the week to see if it was kind of holding those lines. Obviously, we'll talk about that in a second. But that was kind of the only focus for me. But just looking at this now, it looks like big tech did pretty well overall. So yeah, weird.
Agreed. What about you, Kay?
I was mostly focused on my usual suspects, right? Tesla, Apple, ExxonMobil, Square. Those were the ones I was looking forward. I was looking at. Nothing stood out last week much because I think if you look at even the sector itself, pretty much flat, like 2% up for the week or so. So nothing substantial like in a couple previous weeks where you saw double-digit gains or declines. So that's, but next week should be fun. I think we are waiting for the next week.
Just a few things going on this next week. We'll definitely get into that.
Just a few things. Yeah,
not much.
Yeah, last week on the Trading Triangle, we had some great, great ideas that we brought through. But like we mentioned, earnings is kind of fading. But one of the things that we talked about was SoFi, and SoFi is hitting resistance, and Tesla, which had a nice week last week, also hitting resistance. So Sean, I'm interested in to hear what you have to say about that. My chart shows we're hitting some resistance there at a downtrend. So really looking forward to hear what we got there. Keeping it rolling, Fear and Greed Index still squarely in the greed sector, and some good numbers. Look at the VIX. K, volatility 1235. Is that right? That feels like that's not right. It's so low.
Nothing is happening. That's why volatility is so low. Nothing is happening. I think everybody is waiting for the numbers to come out and the decision. And I think if it's in line, I don't think volatility is going to change, but there's definitely going to be much more movement. And if you look at the index, the fear index, it was pretty flat. Like it was 68 or 67 last week. It was 68 the week previous, right? So not much changed. If you look at the percentage on SPY, QQQ, IWM, DIA, pretty flat, right, for the week. I mean, plus 0.25, plus 0.83, not much happening. It was 4+% for IWM last week.
That's right. I mean, IWM took off. I forgot about that. It went from in the short amount of time, I know it went from 170 to this 185 area. So a little bit more gains this week. Then Bitcoin pushing 44K. This is nice. This is why the Marathon Digital trade worked out pretty well. You keeping an eye on that, Sean?
Well, I've got something fun that maybe we could do for next week. Obviously, we've got a lot of events next week, so maybe we could put a little gamify a little bit on the Fear and Greed Index. What do you think will be next week? And I'll write them down. We can compare our little answers next week.
This is a great question.
Could go one of each way, of course, but I'm obviously going to go bullish. But
I think it's pulling back next week, honestly.
Whoa,
I thought it was going to pull back this weekend.
I think the other way. I don't think it's going to pull back.
You don't think so, huh? You guys both going the other way?
Yeah.
What are you saying in there? What are you saying?
I think we can cover in our next slide when we go to that point, right? We'll show the chart and we'll talk about it.
All right, let's do it then. Sean, you keep track here though. So I'm going the other direction towards neutral. Do you want us to call out numbers? Are we taking
Just
shots at
let's go
numbers?
for a number. Yeah, let's go for a number.
All right. So
Or like a ballpark if you want.
our previous close was 64. A week ago at 67, and a month ago all the way back at 42. I'm gonna go with 57.
You do. Good guess.
57.
Okay.
I think on Spy, right?
Yeah, whatever
Yeah.
we feel
Period.
follows.
I'll say 470.
Oh no, we're saying on the Fear and
Okay.
Greed Index.
Oh, Fear and Greed. Okay.
What number
I'll
you
say
got there?
I'll say over 75. Anything above 75.
You're going extreme greed. Okay.
You'll go into extreme greed, 100%.
Okay, I'll go 74 just to be different then.
Okay.
The price is right. $1.
Yeah, there you go.
I love it. Okay. So I'm the only one going the other direction. I feel like 57 might be too, but I'm sticking to it. All right. That's probably too much, but I'll get direction right anyways. Earnings. So we've got a couple names. I mean, I'm definitely paying attention to Adobe. That's Wednesday after the close.
Yep.
Costco on Thursday.
Yeah, you got Oracle on Monday.
Yeah. Right.
Yeah, I mean, that's pretty much it. It's like at the tail end, nothing much is happening. Most of the big names have reported earnings already.
Anything else on this one, Sean? We just zipping through earnings.
Zip through this one. Yeah, I mean, Adobe would be nice to look at, but that's it really for me.
Yeah, I mean, again, Adobe, Costco. There's a few other names in here, Johnson Controls and whatnot, but nothing really that I'm interested in. So keeping it going, and as you noted there, not just my thoughts. I'm getting some confluence there. Okay, so anyways, the United States annual inflation rates. Kay, what are we looking at here?
All right. So, as we talked about, next week is going to be a pretty historical week in terms of we're going to get the last numbers for this year. Of course, we are getting November numbers, but for this year, this will be the last inflation numbers coming out. December numbers will come out in January. So, what we are going to expect is that the last month we were at 3.2% for the inflation. This month it's expected around 3.1%. So that's what it shows right now. And if you look at from January where we were sitting at 6.4%, I've cut down almost half of what inflation rate was. Now we can debate about whether these are true numbers or not. Let's keep that discussion on the side. Just by looking at these specific numbers, in January you were at 6.4%. Now you're 3.2%. Heading on a downward trajectory for 3.1 in November.
Yeah, so the trend is obvious, right?
Yeah.
I mean, even the numbers are what the numbers are. The trend is definitely there.
Exactly.
Yeah, and I mean, inflation's still biting the pocketbooks. I think that's how I feel in the general sense I get from everybody I talk to. But it's like you said, it's waning. It's not like oh my God, things keep going up at incredible rates. At least here in the States. So it's still, inflation still means, 3.2, you still have inflation. Obviously, prices are still rising, but at a more moderate rate. And I think overall that's going to be beneficial. Plus the jobs reports last week, right? Like there was nothing that came out that was staggering and negative. It was like kind of neutral to a little bit positive there. So with respects to the economy. So
yeah, I mean,
the two things together. Yeah. Sorry, Kate.
Unemployment has to go up. So that's the positive news for the Fed for the inflation to come down. Right? It's inverse.
So do you think that this means, Sean, what do you think about the rate decision? Like, because this is going to tie into it, right? Do you think that this means anything, or do you think they're pretty much kind of set in their ways? Do you have any opinions there?
I think they're set in their ways. I mean, they've said it quite clearly, I think, the whole year, maybe slightly longer. Obviously, the path is 2%, isn't it? So whatever means possible to get to that target. And obviously, we'll probably get a pause, I guess, on Wednesday.
Here's my take, though, a little bit different. So if you think about it, right, folks generally in the government or in senior position, what is the most important thing that it's also optics, right? So think about this. Just could be completely off. You're at 3.1% expected. Let's say it drops to 2.9, 9.1, 9.2, 9.3, 9.9, let's say.
A two-handed.
That's an optic, right? Now you're in the 2.9 range. You were at 6.4, which means technically Federal Reserve has done a good job, right? From 6.
Hard to argue it. Yeah, it'd be really hard to argue. You get that two handle. I agree, Kay.
Yeah.
I think if you get a two-handle, the market's going to be very excited.
I think you are going to see a new monster all-time high if that happens.
Of course.
Now, I'm not saying that how long it can maintain that. That's not what we're discussing. We are discussing, can it break its current all-time high, which was still pretty above right now from the levels right now when you'll touch upon it. But that is something that could tie up easily into your Santa rally, which technically, if you think about it, we haven't gotten a good Santa rally in the last 2 years, right? It's been decent, okay here and there, but you really haven't seen major moves in the last 2 years.
So do you think if it comes in level at 3.1, you said it was projected, wasn't it? If it comes in level, do you think we still get that Santa rally, or does it have to come in lower? Because I think it has to come in lower.
So my take is that on the next slide, we expect that there won't be any more interest rate hikes, right? I think that is priced in the market.
Let's take a look.
Right? I don't know if this is priced in the market or not. If it comes 3.1, if it comes in line, or if it beats it. So right now, this is the 97% chance that the rate will remain flat. It's only 2.9% chance that they will raise the interest. I don't think that's I don't think there is any more interest rate hikes coming, because the trend is showing you that whatever they are doing is working on the numbers on the chart. So I don't see why they would want to bump it up and cause havoc, because now you're looking at rate cuts for next year. So if you're looking at rate cuts, depending on who you hear, some folks are saying it will be start of Q2 in April. Some people are saying it will be end of Q2, which will be around June, July timeframe. So depending on who you look at it, for them to do rate cuts, there's one basic thing that needs to work. Either something is going to break in the system early, so they have to revive the economy, or they have hit their goal of 2%, which I don't think they can hit in the next 6 months. Because as it gets closer to the 2% mark, it's going to be slower and stickier, right? It's going to take time. The last mile is always a tough one.
What are your thoughts on that, Sean?
Is that because you're a runner, Kay? Yeah. I mean, I think we'll obviously get a pause, but my focus is on the number that we get for CPI on Tuesday, because that's essentially what's going to move it. But I think regardless, I mean, if it comes in really hot, like 3.3, 3.4, then that's a decision that they're going to have to make, and you probably see this scale swing quite dramatically. But I still think that they're on a good path, and obviously last month showed that we're kind of coming down nicely. It was 3.7 to 3.2, I think it was.
Yeah, if you go back to the last slide, we can see
which is a 0.5 difference within a month. So if we can at least stay flat or come a little bit lower, I think that would make sense to me, just on the trajectory side of things. So they're kind of my thoughts of CPI. I mean, I just don't see it coming in hot. I mean, it could do, of course, but I don't see it personally.
No, and you know what? I really don't think it's going to be. And I think when I'll touch ExxonMobil, I'll actually touch upon this point a little bit later when I talk about my slides. But yeah, I think we are all both aligned that there won't be any more interest rate hike for this year. And I think if it's 3.1 or below, I think we will see green market 100%.
All right, we'll see you guys. What do we have dates for all this stuff coming out? Yeah, before we get to the charts here, what are the? I mean, is it Wednesday for
Tuesday for inflation number, Wednesday for Jerome Powell?
Yeah, okay, that's what I thought. So Tuesday, Wednesday are the days. Yeah. Good stuff. All right, John, you brought up the SPY chart, and this is a weekly, so I'm going to hand it to you to kick these off this week.
Yeah, a little bit of a zoom out, just a bit of perspective to see how far we've really come in the last 6 weeks. You can see quite a rocket off of that 50 moving average, which is the kind of middle blue line. But I put in the first vertical line, the orange one, which is just kind of where it was a year ago, for example. So it's not year to date, but it's where it was a year ago. So we're kind of almost at 52-week highs, which is quite incredible considering the way we've been through the last couple of years. And obviously, again, we've been speaking about it just recently, but the CPI and stuff, if we get a good one, then I think it's 52-week highs, and we're going to head towards that 480 level, in my honest opinion, just because that's how the markets work. They work on emotion, don't they? But yeah, that's the 480 in the top left corner. That's the high. All-time high, I guess. So we'll see if we can get back up to there. But nothing really else to say on this. It's just my kind of perspective and what I see on this. RSI is not too bad either on the weekly. So yeah, I think could be more room ahead.
Yeah, I thought that it was impressive close on the week there, getting above 460, right? I mean, definitely. And so when I talk about next week pulling back, I mean, just because like a cool down. I think markets are and this chart shows it clearly. That's a lot of very nice candles to the upside. It's many weeks in a row, 6 in a row here we got. So yeah, I like to see it close above 460. That was impressive. A second candle, and I'm talking daily candles above that 460 level would be really nice to see, and that would kind of show, some bullish strength there. I think. I'm just wondering if ahead of CPI and ahead of rates, if we don't get a little bit of timid markets Monday and Tuesday, although it would be Tuesday pre-market, right? So
Yeah,
that'd be pretty quick. We'll get that info. What do you think, Kay? Anything to add?
No, I think Tuesday, as we said, if it is in line, the inflation numbers are better than what expected. I think I wouldn't be surprised if they they break the trend line that you have, the resistance at 460, and you might be having some more up days. You could even touch 480, in the coming week before the year ends.
Yeah, so we have 469 and 480 next.
Yeah. Right. And from the options standpoint, there's a slight hedging going on Wednesday, which is 12.13, right? 1.52 put to call. And then on Tuesday, they have 1.16. So slight hedging on the SPY between Tuesday and Wednesday, but not much. Still a lot more call options.
Yeah, okay. I'm out on an island is how I'm feeling right now. Everybody's going long. All right, let's see what happens here with the Qs. And are we looking at weekly as well? Yeah, weekly and daily. What are your thoughts?
Yeah, so on the left we've got the weekly, on the right we've got the daily, and we just kind of I don't know. We had a nice little bounce off the 20 moving average on the one day on the right side there, and you kind of calmed down at the RSI as well for the last few weeks, kind of almost setting up for a move, perhaps if it goes up or down, of course. But we got that 394, which I think is quite an important point just to kind of break through. You could probably bring it a little bit lower if you wanted to. Nate, you might think you might want to bring that a bit lower. But I think ultimately, again, a similar sort of story with the SPY. If we can get back up to 408, and then obviously on good news or whatever, and then that's kind of got to be the real test, of course. And 2024 could be, down from there, considering the run we've made this year. Contrary to that, obviously, if we break down and we go below the 388 level, CPI comes in hot, then I've got that level of 382. But I think that's not so solid. If you look back through the chart, it's not that solid. I don't think we can go back down to 370. And I'll probably play that, to be honest, because obviously sentiment, as soon as sentiment goes the other way, it goes the other way, regardless if it's up or down. Especially in these markets at the moment. You can see that on the chart in front of you, especially with tech. But yeah, that's my thoughts on the QQQ.
I got that gap fill in mind down there, Sean. Down to 378.
378, yeah. I don't know why I didn't put the line there, actually. Yeah, good point.
Yeah, I like that one. And so, yeah, when I saw your 382, I was like, yeah, if that's not as strong as you mentioned, definitely looking at 378 if we get that, negative turn that you mentioned there. But the Qs have been powering higher, really leading the way. So, I don't know, 408. What do you think, Kay?
I think so too. I think the same pattern we can see with QQQ, same little bit hedging extra on Wednesday for the Jerome Powell call, but it's 1.13, not that much compared to, we have seen earlier, like 1.75, 1.89 on the put to call.
Very nice. All right. Well, let's keep it going here. Sean, I know you've got some interesting charts. I mentioned Tesla. Let's get into it.
Yeah, of course, and it's not too much different than it was last week, but it's just kind of moving towards that setup, isn't it? A break of the trend line in upwards fashion or downwards fashion. And I've got a couple of targets there. I've got 257, which is where the volume profile ironically goes. But I think if Tesla does break either way, it will move quickly, because obviously that's what Tesla does. But the price action I like to see, and what we saw at the beginning of the week, was that kind of come down and retest again of the 20 and the 50 moving averages, which is where the yellow highlighted area is. So we've kind of tested that, which is showing strength. Obviously, people are still interested in the stock. It's Tesla. Why wouldn't they be? And obviously, we just keep battling this trend line resistance, as you mentioned earlier. And I think once we get through that, hopefully, fingers crossed, CPI comes in nicely, we could see aggressive upside. Just because it's Tesla, we've seen it before. You can see it on the far left of the chart there. So there is a bit of a pedigree for that. That's not the right word, whatever word I didn't want to use there. But yeah, 257. I mean, there's lots of resistance in the way, but I think this stock pushes through resistance quite easily. I don't know if you agree with that. Maybe Kay. Obviously, you invest in Tesla quite a lot.
Yeah. No, I think it's a very interesting because I really want to see how this plays out from a trend standpoint. Because from looking at the option perspective, it's pretty bullish. If it even though the longer trend is still lower highs, but if we can break this, we can actually go back and retest the 257, and I think that's where that 256 to 260 is where majority of the buying is there, and from a volume standpoint, and then it starts to dwindle down. Also, got to see, is there anything additional, any events that are coming up? Nothing that I can think of for December, but if you get a rally in the S&P 500 and QQQ, that will benefit these stocks as well, right? There'll be a lot more FOMO coming in. There may be still institutional investors who are sitting on the sideline because they do have to invest the money for Q4. They don't want to carry cash getting into end of Q4 and then have to report to their clients on why they did not invest when the market was making all-time high. So we may get some FOMO coming into Tesla as well. If we see if we see a monster rally. That's my take.
Nice. I think if you, sorry, just before you start talking about that candle that on Thursday, that was quite nice. The kind of buyers coming in off of the yellow highlighted area. I just wanted to add that in before we start talking. But sorry if that was your point.
No, you're good. It's kind of doing the sideways consolidation thing, right? Where it's barcoding. I know that's a phrase I picked up from Kay. And I like it a lot.
Barcoding. Yeah,
that's what it's been doing, right? So, I think we're gonna get a decision point here soon. I know all the Tesla bulls out there that I talk to are like geared up and have been loading up over this past couple of weeks in this consolidation zone. So, but you're right. I think with respect to resistance points and support levels, quite frankly, Tesla's known to just blow right through them when it gets rolling in one direction or the other. So, just be mindful of that. But we're right there, and if markets are gonna rip and it close out the year strong, then Tesla is most likely gonna make some really nice moves. So I like that we've got this on the radar for sure. Always bring in the right charts, Sean.
I do my best. Yeah.
Let's see. Shall we keep it going? What do we have next?
Yeah.
PayPal.
I actually completely forgot what my second chart was until you just brought it up. So that's good news. Yeah, I do know now. That's good. PayPal. I brought this up a few weeks ago, and we can see a really nice trend forming with the kind of moving averages kind of coming up nicely there. The 20 moving average, which is a slightly lighter blue line, and obviously the trend line as well. Just a solid trend line that you can see that started back in late October. But we've got this really big resistance ahead, and this is a level that I'm looking at quite strongly, and that's the $60.20, $60.20. I mean, and you can see that's kind of highlighted throughout the screen. You've got lots of contact points, and I believe that to be quite a good support resistance. So basically, I'm looking out for a breakout. Surprise, surprise. Looking out for a breakout at that $60 level, you could say. And the ultimate target, as you can see, is the gap fill, which is at 72.40, and that represents 20%. So it's a bit more of a trade idea for this one. Obviously, the CPI result on Tuesday might set this on a path up or down. But yeah, those are my targets: 60 to 72, which obviously, I'm not going to repeat myself, but yeah, 20%. Anything you see, maybe a breakdown, perhaps, but yeah.
It's an interesting move here. Higher highs, higher lows. That's my favorite pattern of all time here.
Yeah.
Okay, what do you think? Similar thoughts?
Similar thoughts, but I doubt that because if you look at the last two gap ups or gap downs, right, it generally happens at the earning. Like a 20% move, you would not get it unless there's a major event. Earning is a major event. But again, we could be completely wrong because look at all the fintech stocks recently. They had this massive run, whether it was PayPal, Square, SoFi. SoFi did not do actually much well, but Square and Hood, all those had major runs. So what is your range, what you're looking at? Are you looking like end of December range? Or
So I'll be treating this as a swing trade, probably 2 or 3 months. With the correction of the stock and the fundamentals kind of flowing through. The earnings reports lately have been not too bad. So kind of maybe adding on the dips on the trend line on the way up to that 72 level. But obviously we had that resistance at 200 moving average first. But basically a swing trade is what I'd be looking at.
I think then I like the trend. I like the trend as well, swing trade wise. Yeah.
I like it. The one thing I would note is, and I do this for any chart like this, is that trend line, if it breaks, I would have a pretty quick cut on that because,
Loss?
yeah, I mean, stop loss I'd have tight right on that trend line, and I would cut my losses pretty quick because um, look at how it's worked in the past, and this is a typical pattern where, and it works the other way around too. Like if the stock's trading to the upside and then has this kind of nice range to the downside, once it breaks back up, it takes back off. Well, same thing going the other direction. So PayPal here is now trying to climb and move higher, and if it breaks this resistance that you're talking about and gets that move, I think you have some great opportunity there. But conversely, if it breaks the trend line to the downside, I think there's going to be that pressure to continue lower, and you can see it. It's happened twice previously in this chart. So, yeah, I mean, once PayPal, I should say, once we get PayPal gets above 67, call it that prior high from in September, that's when I would think like, oh, okay, definitely, yeah, and that's what you've got marked basically the 65 level. Once it gets above there, then you can see some real momentum and really pushing to make what I would call meaningful higher highs. But this is how it starts, right? So good to have on the
Yeah.
watch list.
Oh, good.
Nice.
Good.
All right, let's keep it going here. Thanks for these, Sean.
No problem. Obviously, you can contact me on X for any day trading queries or whatever, just a little bit of banter or whatever. On YouTube this week, I've just got an Enphase video that I've released today, which is I see as a little bit of a trade opportunity, nice little setup. So go ahead and check that one out. And obviously, I do Substack as well, which is my newsletter. And this week I've had a look at ETFs, which I don't normally look at. But yeah, what were your thoughts on that?
I love your structure. I was skimming through it. I was super busy this morning, but I love the structure. You keep it real clean and simple with the bullet points, and yeah, it's definitely something I like. So keep doing that, Sean. Keep putting that out.
So 2 comments here, right? One is I said that I'm going to copy Sean's format for Substack, and that is on my agenda for 2024. But Sean, I did watch your the video that you just posted on Enphase, right? I think it's a pretty good trade opportunity. I might just actually get into one as well.
Nice.
Nice. Yeah, good.
Looking
That's
forward
it for
to
me.
hearing-
I'll hand it over to Nate.
Thanks, Sean. I'm looking forward to hearing about those trades from both of you.
Hmm.
I've got DraftKings, an oldie but a goodie. You know, I like to talk about DraftKings, and I bring it up with good reason. So last week I had Arista Networks, ANET, and we're talking about that coming back down and testing a support line that had broken through. And here we're seeing it again in both charts I'm bringing up this week, DraftKings being the first, where $35 is that key level to hold on to. And I was, watching it closely Friday because I went and tested the $35 level, and it's held up nicely. Now, there's still room to drop down to the 50-day moving average. So, it's not like 35 is the end all be all, but if we get a nice bounce here and it holds, I really think that pushing towards 40 and 45, just trying to get back above the recent highs here is in the cards. If it does pull back below 35, I'll be a little less bullish. And then I'll be looking for support right around that $31 level. I think that, it doesn't necessarily respect the 50-day moving average, so I think it could break through it a little bit. And 31 looks like it was prior resistance. But that's being, given all of that, RSI is curling up right at the midpoint. So I love to see that kind of holding the positive nature, relative strength. And then that 150-day moving average, you could see back up on the chart on the bottom there. The candles respected that nicely and bounced. So just keeping the positive momentum for the year with DraftKings. We could see it again. I think it ties into overall markets and how things go Tuesday, Wednesday of this week with the broader, narrative. But 35 is the key level for DraftKings. What are your thoughts here, Sean? I saw you taking some notes.
Yeah, so I was just having a look at the chart that I've got here, and I had a look a little bit further back and see if this 35 level actually played in the past. It's got a really nice clean bounce, or a few of them actually, in 2020. Obviously, it's quite far away, quite far ago, but it is a level that it likes. And also, it's a round number. So obviously, psychologically, traders like to have round numbers, zeros and fives, hundreds, 200, etc. So yeah, I think this is a nice level to look at. Again, obviously, it is CPI dependent, as you mentioned, but it's above everything. It's a correct trend, and yeah, I think if you're a long-term investor, I'd probably add here. To be fair, yeah, I probably wouldn't trade it here, just because of the moving averages, of course. But yeah, no, I like the 35 level.
Yeah, I think it's a good place to nibble, perhaps. What do you think, Kay?
Um, I mean, I don't have a position here, so it would be a trade. But yeah, I think I won't be getting into a trade at this point in time. I think having it to test the 35 is important to see if we see a breakdown or is it able to maintain that. There is slightly higher put to call for next week, which is 1.01. So it's pretty even, like 73,000 put option, 72,000 call option. So but the next week, 12/22, you have 27,000 call options and only 4,000 put options. So it just the put to call drops to 0.17. So I will be a little bit more careful on this exuberance, especially in this market. But again, tying up with the whole overall market strategy, if you see a big decline, it won't be able to hold this level because you
Right.
don't have much. It goes back all the way to 2020, right? So you could see a breakdown at these levels.
So I'm glad. What I'm hearing from you both is it's a hold. That's what I'm hearing, and that kind of works with me because I got in at 26 recently ahead of earnings, and I've been holding on. So it was nice to see it run all the way to 40,
Nice.
but holding here at 35. I think if 35 breaks, I might take a little bit off and just collect those nice gains, and then just leave a little bit on to see if it finds some support. But yeah, the trades worked out nicely. So for those of you that are in it, I'm feeling like the hold is right as long as 35 holds on. And we'll see what happens.
I can't remember if you mentioned RSI, but that looks good as well. The way it's calmed down. I've just checked on the weekly as well. The RSI on the weekly looks pretty nice.
Oh, that's good. I did not
Settled
mention
down
the
now.
weekly, but yeah, on the daily here, right at the midpoint, curling up. It's really nice to see.
Yeah.
And then the next chart I've got is Shopify. So a
Ooh,
fan
nice.
favorite. Yeah,
Yes.
I haven't talked about Shopify in a little bit. And $70.50, another nice little round numbers. That it broke above recently. That was the prior highs that we got to over the summer. And now we're getting back above there, come back down, retesting it. So the last couple of weeks, made new highs, new recent highs. And are these all-time highs? Wow, I don't remember. I know I was looking at the chart, and these might even be all-time highs. Maybe one
I
of you
guess
guys can check that.
it's a high for the year as well.
It's definitely 52 week. And
Yeah.
And it's not all-time highs, excuse me. Yeah, it's 52 week. That's what I was thinking of. So above the 70-50 level here, and double check me on that because I've been looking at too many charts today. But the 20-day moving average is where it found some support right at the same price level. And I'm liking that. 2 points of support right at the same spot. RSI cooled off, so it had, but then started curling back up. So it got some room to run. And you can see everything from a moving average perspective starting to look really positive. 20 crossed above the 50, 50 starting to cross above the 150. That being said, if things do break down, I think it could drop all the way to 10 points pretty quick to 70, or from 70 to 60, excuse me, if it doesn't find some support at 66. So that's kind of like the levels I'm looking for. I want it to hold 70. If it doesn't, then 66 is next. It had some, that was definitely prior resistance, but more likely, I think you go all the way back down to that 50-day moving average. What do we guys add here? Sean, you mentioned trade versus investing on the DraftKings. What do you think about Shopify?
So for me, this one would be a bit more of a trade, I think. Obviously, we've got the
Sure.
bullish indicator of the 50 coming through, the 150, I think you said, on this one. So that's a nice indicator for like a swing trade, not so much a day trade. You probably could day trade this just to get back up to that kind of 75 level. It's not the biggest percentage, but obviously day trades are generally leveraged anyway. And you've got that 20 moving average behind you, just below you, so it's not too much of a risk. But yeah, I like the way it's bounced off of this 70-50 level, that's for sure. So I've written it down on my list there, but I just had a little look at the weekly as well. I know you mentioned the trading, but for the long-term investors, we do have a bit of resistance at 81, which is the 200 moving average, which has been going for quite some time. But yeah, I think this is a nice setup for continued trend, because they showed really good results in the last earnings reports, if I'm not wrong, and you
Yeah.
can probably see that actually in the chart. But yeah, no, I like this chart to continue momentum. Probably a slow grind in my opinion.
Yeah, it's looking good to me. I wanted to bring this one back up, and it kind of reminded me of Arista Networks last week, retesting recent highs. So I like Shopify here. I'll be talking about it, I'm sure, on X. You guys can find me there. on mini spaces Tuesday, Wednesday nights pretty regularly now. So we'll be doing that 8 p.m. Eastern if you guys are around. Kay, you've joined us, had a good time with that. Sean, we talk about you, so for what that's worth. And
We don't
we have,
You do, yeah, you do.
yeah, that's the thing. We're global, right? The Trading Triangle is global, so some time zones work at certain times, some don't. But yeah, we'll be bringing it more on Spaces throughout the week. Also, with Wolf Financial, you can check my newsletter publications there, as well as my own on the Trader's Education over on Substack, along with these two gentlemen. And I appreciate you guys tuning in. I'll hand it over to Kay next.
Awesome. Thank you. So guess what? We are bringing back ExxonMobil again as usual, right? And I think, see, Sean, it's playing out the way you said it's going to play out, right? We did had a break in the trend line, and that 99 level broke down. Now, so I started looking into like what exactly is happening. We hit the all-time high, not the all-time high, but for the level on the volume profile, you see the all-time high of 119.61. That is when the oil prices were actually at its highest. So oil prices have been declining, and ExxonMobil the chart can mimic itself, right, based on the crude prices. Interestingly, we also found, now I'm going to touch upon a little bit politics here. Even though we don't talk politics here, but if you actually hear most of the folks talking that we need to drill more in US. Interestingly, actually, USA is drilling a lot of oil, and that has caused a lot more oil in the market. And that is the reason that OPEC is also trying to now cut down the supply further so they can increase the prices, because the prices have come down to what, a little bit over $70. I think 71, 72, yeah, $71.26 per barrel. And it was trending at almost $100 a barrel. So that's a pretty big decline of 30%. And that is the reason we see this major decline in the ExxonMobil price. Now, we also see a lot more higher put to call ratio of 1, which is pretty flat, right? For 12-15 expiration, if you go further out, it gets slightly better. The volume has started slowly picking back up, and RSI is also slowly on the rise. But I think, Sean, what you had predicted at least 2 weeks ago is still playing. We had this clear break in the trend line, and I'm just interested to see how this plays out. This $99 to $100 is a real fight. I think pretty much every single day we see that. So it'll be interesting to see if we see further, increase in the in the crude prices. We'll see Exxon coming back up. If we see further decline, I think we are in for a little bit more trouble. But yeah, I'm still in Exxon trade. I trade pretty much on a weekly basis. But yeah, what are you guys thinking and looking at this chart? What does it tell you?
So this one's quite interesting. If you look at the little chart that you put at the top, you can kind of see that 70 level is a bit of a support, even in that chart. So, obviously that corresponds to 99 on your chart. So that 99 level could be somewhere if you wanted to add. I know you've broken the trend line, but it's still a support line, regardless of where it is. But for me, obviously, I'm going to continue bashing this stock, I suppose, to a negative level. But if it does break that kind of 99 level, because it hasn't quite broken it yet, those 3 candles are kind of hovering around it. It's kind of trying, it's seeing what's going to happen. But if people start adding, people start getting excited about oil again, then obviously you can see that momentum take off quite nicely. But yeah, I think that's I lost my train of thought slightly, but yeah, we're at support, and it's just basically got to bounce or move down.
I know what's going on, Sean. Don't worry about it. Kay tried to put a whole bunch of data points on this chart to distract from the fact that you were right and that you were breaking through the lower end of the trend line.
Exactly. There you go. You found me.
Confused me.
Yeah. There you go.
It's definitely
Still
moving
going
lower.
But it's playing out. It's playing out. So I mean, I'll take that. This was a very good call 3 weeks ago. I don't know, for folks who listen to us on a weekly basis, Sean did call this out, and it's playing out the same way. So it's pretty good, pretty spot on, Sean.
Absolutely. Hey, I'll tell you what, guys, and for what it's worth, XLE, right, the ETF, in my long-term portfolio of ETFs, I started buying shares of that in 2021 at $36, and really great trade. Added more in the low 40s, and then just kind of rode it all the way up. And I've been saying for a while now, 82.50 has to hold, and I let shares pull back quite a bit, but they broke 82.50, and ExxonMobil obviously is like, a huge percentage, something like ridiculous. I can't remember if it's 20, 25%, but it's a huge chunk of the fund. And so where ExxonMobil goes, XLE goes, and I actually sold out of the position. I still have energy positions. I'm not out of energy, but yeah, that was a long trade I was in, and this is what did it. This is ultimately what did it. So I think that we're going to go a little bit lower here. Although that $70 support line for crude oil is definitely worth noting. I think that you're right about that, Sean.
Yeah, and I do think that OPEC will eventually step in, because they would not let the oil prices fall down too much. They will come in, they will probably restrict to push the prices back up higher, since USA is also dumping a lot more oil in the market. So we'll see how that plays out. But so far, from the technical standpoint, it's playing out as Sean is predicting. So still in
Let's
the
get
game.
on.
Yeah. All right.
Nice.
Let's jump into the next one. Oh, so we have not talked about Apple a lot, right? Apple of my eye, right? But it's setting up to a very interesting place. We are touching up, clubbing very closer to the nearing all-time high here. If you look on the volume profile, it's starting to dwindle down the buying. However, there's a very it's not like a day trade setup, but it's for a long-term swing right setup. 197, of course, is going to be an interesting resistance point to see if it can break through. So what are the different catalysts that can actually break? Because there's no earning coming up. We just had an earning. So earning is a little bit far away, a couple of weeks at least, maybe a month and a half away from now. We could get a Santa rally that could break the all-time high. But that's pretty much it, right? Because next year, it is expected that iPhone sales are not doing as well as they did in iPhone 14 cycle. Not that Apple will stop selling iPhone, but there's always that narrative behind Apple iPhone, because there isn't any other product that Apple has which is as successful as the iPhone. So if we hit that all-time high and we get a retracement, I think that could be a potential play to start adding for a swing trade or to your long-term position. So I'm not like looking to get into the trade at this point in time, but starting to now start to look at watching this, because we could get a bounce back all the way. So if it goes to 197, it could come back all the way to 190 if it gets rejected, because that's where most of your buying is happening. And then if that doesn't hold, then you can see a much further decline, even probably coming down to your 50-day moving average of 181, or so on and so forth. So it's going to be very interesting how it plays out, considering Apple has been and the RSI has been overheated for a while now. If you look at most of November, it traded pretty much in the 70 range, a little bit above, a little bit lower. But so this is a good setup for a pullback or retracement at some point in time, for a long-term position add or even for a swing trade.
Yeah, I like that support right there, Sean. I'm sure you're digging that right there. It looks like a nice breakout, retest of some support and breakout.
So the funny thing is, I actually had this on my list to do this weekend, and then obviously Kay said his picks through, and I was like, I can't cover Apple. So my observation for this one was obviously I don't see, if CPI comes in nicely on Tuesday, I don't see it not moving 1.3%. That's all it has to do to get to all-time highs from this particular point, of course.
Seems
so
reasonable.
I don't see it not moving. I think it moves 3 or 4, for example. And if it breaks all-time highs, maybe comes down and retests it again with the euphoria of the market, it may not happen. But that's the level I'd be looking at, is obviously the all-time high level, come back down, retest it, and then move higher, and just keep a really nice tight stop, because Apple doesn't move a lot really. Generally, you can see it. Obviously, you can see the bars on the chart. It looks like it has done, but day-to-day moves, it's not too bad in terms of percentage-wise. Obviously, it wouldn't be. It's the biggest stock in the world by market cap, I think. Is it right?
Yeah,
is it Microsoft?
Yeah, 3 trillion plus.
Yeah.
So
there you go.
ATR, my favorite ATR for Apple is basically a 280, 279. So that's the daily ATR. So, that's 2 days of upside and you're there basically, right?
Pretty much.
Doesn't take much at all.
But I see this happening, basically, personally. I mean, if CPI comes in nicely, of course. If CPI comes in roughly, then obviously I think Kay's points of going lower are well intact.
Good stuff.
I mean, there is a time, right? There will come a time that they will break their previous all-time high, right? Yeah. And it's setting up for that. it's aligning right with the Santa rally. If you get one, I don't see why it won't happen.
And we're geared up for this year-end rally. That is for sure. Only a couple of weeks left.
Yeah. So, just like the other folks on the channel here, you can find me on Twitter or X. I do join Nate's space call as well, so we can catch me there as well. I have a YouTube channel as well, so it's Invest K or Invest for Tomorrow with K on YouTube, and then I do write on Substack as well, so you can catch me there as well. So that's it from my side.
Thanks, guys. Hey, one thing I want to talk about before we wrap up is Google. Did you guys catch the news with Google this week? I mean, big stuff, right? And just to recap it real quick, at least from what I gathered, they talk about Gemini. Gemini is the big AI product from Google, and the marketing for it. I feel like you guys, Google screws up on the PR side all the time. Like they're just not good at PR. They can't get out of their own way, and that's what happened yet again here. So I was curious your thoughts. My thoughts are. And then, sorry, to get through what happened was they had this video that showed like what Gemini could do, but really it was like, well, what it could do, not what it currently does. And there was like a lot of editing done to get rid of latency, and it was like text scripted, right? So instead of actually its responses, I mean, it wasn't like, showed it talking back in real time, and it's just not really where it's at. And so it was a little deceiving, and I don't like that. But then again, I was like not surprised because of how Google does this on the PR front. But I'm still bullish long term. I think it's just a kind of a hiccup. What do you think, Kay?
I think one thing we can call it and say it out, spade, right? ChatGPT is the market leader at the current point in time when it comes to LLMs, right?
True story.
Language learning models. Whether it's Grok from X or whether it is from your Google, which is the Bard, or any other, they are there, and they will always be the competitors. But there's always generally, there's a leg up. There's a market leader, and I think ChatGPT is the market leader at this current point in time. Will it change? Most likely could be. We'll see how it plays out. And generally for folks who, if you are familiar with software companies and the way software companies release products, if you talk to the salesperson of software company or the marketing person, the software is like amazing. There's nothing wrong with that software. But when you actually talk to people who implement that software or who use the software, they really know how the software works. And I think there's always a disconnect. So take it with a grain of salt when you look at marketing, regardless of which company does it, because there's always a slip between the cup and the lip.
Yeah, I agree. What about you, Sean? Any thoughts there?
I haven't actually followed Gemini at all. I've seen a few headlines going through, but a bit preoccupied. But just AI in generally, I think I'm looking at a lot of ETFs this whole year and seeing which one kind of fits in for the long term. So I think just as a general kind of point, it's here to stay, isn't it? No matter who wins, who takes the lead, it's part of our lives now. And I must admit, I use it quite a lot. I don't know if you guys use it, but
absolutely,
that's my thoughts on AI. But I haven't been following Gemini specifically, unfortunately.
It's part of the daily workflow nowadays now, using AI.
Certainly is.
Yeah.
And you know what the funny part is? I don't know if you guys noticed, X has this new feature where you can actually purchase Premium Plus. And if you have Premium Plus, you get Grok.
Yeah. Have you checked it out yet?
I did not buy it, but I did check out the feature itself.
I'm pretty close. I might pull the trigger today. Yeah. I saw a lot of fun responses. Apparently he says, well, a lot. So that's funny. But I might check that out because Grok looks entertaining, to say the least. But all right, guys. Well, a great week. A lot of information coming up. We went a little long today because there's so much stuff, so many things going on this coming week. So a lot of great trading opportunities comes with that. So I'll be keeping my eyes open. We got some nice swing trade ideas we talked about. A lot of great stuff played out nicely over the past couple of weeks. So hopefully we can keep that running. I'm looking to win the bet on we're swinging back to neutral. So we'll see how that goes, you guys. How about you, Sean? How you feeling?
Yeah, good. I think obviously the next few days I'm going to be taking it quite quietly, I think, to see the data come through, see how stocks react to it, and then kind of play on after that. Personally, from a personal point of view, of course. But yeah, just stay safe out there and obviously subscribe. I don't think we've actually said it yet. Obviously, we're making our way to 1,000. Slow.
Yeah, so much to get through today. We didn't even mention it. Please do
I know.
subscribe to the channel. Getting to 1,000, getting the word out there. Kay, you got last words. What do you have to say?
Well, I'll say this, of course, be safe while you're trading, but make sure you follow us for next week. We have something special. We have the hardest special episode coming out next week.
It's the
And
holiday
it's going to
season.
be it's not going to be that long, but it's going to be still longer than what we do usually. And you don't want to miss that one, especially for 2024.
No, you don't want to miss that.
It's going to be fun, you guys, and there's going to be tons of charts and trade ideas, help close out the year strong. That's what we want to do. So looking forward to seeing y'all next week. Have a great week of trading, and thanks again for tuning in. See you next time.